On the 7th of July, 2022, a Kenyan judge signed an order that froze more than $40 million in the bank accounts of an African company that, 4.5 months earlier, had been declared the most valuable startup on the continent. The company was Flutterwave. Its African operational headquarters was a tower in Victoria Island, Lagos. Its Delaware-registered parent was based in San Francisco. Its founders had built it, in 6 years, into a payments network that connected merchants in 30 African countries to customers everywhere else. The Kenyan Assets Recovery Agency alleged that more than $200 million of suspicious money had passed through Flutterwave's accounts in the guise of merchant services. Flutterwave's response was a single sentence. The claims were entirely false. That freeze was the third public crisis to hit the company in 5 months. The first had been a magazine investigation alleging a toxic internal culture. The second had been a Nigerian journalist's report alleging a phantom co-founder named Greg. And now this. $40 million, frozen. This is the story of how 3 founders in a Lagos co-working space tried to build the African Stripe, and how the company they built became, in the same year, both Africa's most valuable startup and Africa's most public governance crisis. Hi again. Welcome back to the pod. My name is Farouk, and today we are going deep into the story of Flutterwave, how a Lagos payment startup built itself into Africa's most valuable fintech in under 6 years, then spent the next 4 years fighting to keep what it had built, and is now quietly rewriting the entire definition of what an African payments company is supposed to be. Let's get into it. To understand Flutterwave, you have to begin 2 years before it existed, inside a different company. In 2014, a Nigerian entrepreneur named Iyinoluwa Aboyeji co-founded Andela, a developer training and outsourcing company headquartered in Lagos. Andela's business was to train African software engineers and place them as contractors on the teams of American technology companies. By 2015, Andela had hundreds of Nigerian, Kenyan, and Ugandan developers on the books. And every single one of them needed to be paid in US dollars from US-based clients every 2 weeks. The mechanics of those payments were a nightmare. Cross-border transfers from American banks to Nigerian, Kenyan, and Ugandan accounts could take 2 weeks to clear. The fees on each one were punitive. The only viable workaround was to batch process transfers every 1 to 3 months and absorb the lost time as a cost of doing business. Aboyeji watched the same problem play out at every other African internet company trying to pay or be paid across borders. The continent had no unified payments rail. Every country had its own card scheme, its own mobile money network, its own central bank rulebook. No aggregator had stitched them together. The intellectual model was already in front of him. In the United States, between 2010 and 2015, a San Francisco company called Stripe had become the default payments rail for American internet businesses by abstracting away the complexity of multiple banks, multiple card schemes, and multiple acquirers behind a single line of code. The Flutterwave thesis was that the same trick could work for African merchants. One API, one dashboard, one settlement currency, all the African plumbing hidden behind it. The plumbing it would have to hide was an order of magnitude harder than Stripe's. Not just Visa and MasterCard, but Verve, the African card scheme run by Interswitch, M-Pesa, the Safaricom mobile money network in Kenya, Momo, the MTN money network across West and Central Africa, Airtel Money, GT Bank's USSD rails, the Nigerian instant pay system known as NIBBS, the Kenyan instant pay system called Pesalink, and underneath all of it, a regulatory matrix spanning dozens of central banks, each with its own licensing requirements and capital adequacy rules. The team that decided to take this on was 3 people. The first was Iyinoluwa Aboyeji himself. Born in Lagos in 1991, a University of Waterloo graduate and Andela co-founder, at 25, he was the youngest of the 3. He was the storyteller, the public face, the man who would write the investor decks and walk into the meetings. The second was Olugbenga Agbula, known almost universally as GB. Born in Lagos in 1985, with a master's degree in information technology from the University of Lagos and an MBA from MIT Sloan, Agbula had spent his 20s inside the global payments machine. PayPal as an application engineer, Google as a product manager on Google Wallet, Standard Bank Nigeria on biometric payments, and immediately before Flutterwave, head of digital factory and innovation at Access Bank in Lagos. He was the technical architect, the product head, the man who actually knew how money moved. The third was Adeleke Adekoya, a Nigerian banking veteran from the compliance side of commercial banking. He was the licensing brain. He was the partner who knew which Central Bank of Nigeria circular applied to which transaction type, which jurisdiction needed, which subsidiary structure, and who would handle the paperwork in every African country the company eventually entered. He never became a public figure. He never held a C-suite title after the founding years. But the legality of every market Flutterwave entered ran through him. Flutterwave Incorporated was formally registered as a Delaware C Corp on the 2nd of May, 2016. Operations ran out of a co-working space in Lekki, a district on the eastern edge of Lagos. The product launched commercially under the brand Rave by Flutterwave, a merchant-facing payments API and dashboard. Aboyeji was chief executive. Agbula was chief technology officer. Adekoya handled compliance. The proof point came almost immediately. Uber had launched in Lagos in 2014 and by 2016 needed a way to pay thousands of Nigerian drivers in Naira while collecting card payments from riders in several currencies. Flutterwave became Uber's driver payout partner in Nigeria. The Uber logo became the marquee credential on every subsequent investor deck. On the 17th of July, 2017, 3 Silicon Valley venture funds, Green Visor Capital, Glyn Capital, and CRE Venture Capital, wrote the first institutional checks. By the end of that year, the aggregate seed and Series A funding had reached around $10 million. The thesis was working. The merchants were signing up. The plumbing was being built. And then, 15 months later, the company's founding chief executive walked out the door. On the 5th of October, 2018, Ayinoluwa Aboyeji stepped down as chief executive of Flutterwave. The publicly stated reason was a strategic pivot to founder investing. Aboyeji would soon launch a venture platform called Future Africa to back the next generation of African founders. He remained on the Flutterwave cap table. He remained, publicly, on cordial terms with the company. The internal reality, per multiple reports that surfaced years later, was more contested. The reports cited disagreements with Agbula over share allocation and governance. The full account would not surface until 2022. Olugbenga Agbula moved from Chief Technology Officer to Chief Executive. He would never give up the title. The airline he inherited, to borrow a phrase from another Asili story, was a company that worked but had not yet scaled. Flutterwave processed perhaps a few $100 million a year in payment value. It served a few thousand merchants, mostly in Nigeria. It had won the Uber logo, but most of the rest of the African internet economy still ran on a patchwork of local processes. And it had a shadow. Its name was Paystack. Paystack had been founded in 2015, a year before Flutterwave, by 2 Nigerians named Shola Akinlade and Ezra Olubi. Paystack had been the first West African company ever accepted into the Y Combinator Accelerator in the winter 2016 batch. Paystack had a cleaner brand, a more developer-friendly product, and a public reputation for being the quieter, less dramatic Nigerian payment story. Through the late 2010s, the two companies grew in parallel, chasing the same merchants, raising from many of the same investors, comparing themselves to each other in every pitch. Agbula's strategic response was to accept that Paystack would win the developer brand war, and to take Flutterwave somewhere Paystack would not go. Cross-border, multi-currency, marquee enterprise accounts. While Paystack focused on Nigerian and Ghanaian small businesses, Flutterwave went after Uber, Netflix, Microsoft, Booking.com. While Paystack stayed close to its founding stack, Flutterwave built out a foreign exchange settlement layer, a virtual card product, a consumer-facing remittance app, then called Barter. In 2019, the company partnered with Visa to launch Barter, including dollar virtual cards for Nigerian consumers, who at that point had limited legal access to dollar-denominated spending. The same year, 2019, Flutterwave hired the consulting firm KPMG to investigate the first round of sexual harassment allegations that had surfaced internally against members of the senior team. The company introduced a whistleblower policy. The findings of the KPMG investigation were never published. On the 21st of January, 2020, the company closed a $35 million Series B round, co-led by the New York fund Greycroft and the European Fund of Ventures, with participation from Visa, the global processor FIS, and several of the existing seed-stage backers. That round was the moment the cap table tilted from African friends and family money to global growth capital. 3 months later, the world stopped going to physical stores. The COVID-19 pandemic, devastating in almost every other dimension, did something to African e-commerce that no marketing campaign could have done. Lagos, Nairobi, Johannesburg, Accra, Cairo, every major African urban consumer pulled out a phone and started buying online. Restaurants put up payment links. Small retailers launched WhatsApp storefronts. Subscription services hit numbers they had projected for 2025. And every single one of those payment flows needed a processor. Flutterwave's transaction volumes accelerated through the second half of 2020. The team grew. New markets opened. By the end of that year, Flutterwave was processing a multiple of what it had at the start. And then, in October of 2020, the shadow finally moved. Stripe, the San Francisco company whose product Flutterwave had been openly trying to copy, announced the acquisition of Paystack for more than $200 million. The Nigerian payments founder who had ridden into Y Combinator 1 year before Flutterwave was now a Stripe employee. The competitor was inside the global market leader. Agbula's response was to raise harder. Between January of 2021 and February of 2022, in 14 months, Flutterwave raised $420 million in venture capital and multiplied its private valuation 30-fold. The first round was the Series C. On the 9th of March, 2021, Flutterwave announced $170 million led jointly by Avenir Growth Capital and Tiger Global Management, with participation from DST Global, Salesforce Ventures, WorldPay FIS, and a syndicate of growth investors. The valuation crossed $1 billion. Flutterwave became the fourth African company ever to hold a unicorn valuation, after Jumia, Fori, and Interswitch. Agbula, that same year, made Time Magazine's Time 100 Next list and Fortune's 40 Under 40. The pitch he was making to global investors was a simple one. African e-commerce, African digital banking, and African consumer payments were all simultaneously inflecting. Whoever owned the rail underneath all of them would compound for the next decade. Stripe, with the Paystack acquisition under its belt, was telling the same story. Flutterwave was telling it harder. The numbers underneath the pitch were defensible. By 2021, Flutterwave was processing payments for one of the largest merchant bases on the continent. Annual recurring revenue was on a trajectory from around $50 million in 2021 to around $65 million in 2023 to over $95 million in 2024. The take rate on the volume, the share of every dollar of payment value that the company captured as revenue, was low, in the range of 20 to 40 basis points, because most of the volume came from large enterprise customers paying close to wholesale rates. But the volume itself was growing fast enough that the absolute revenue was compounding well. Then came the second round. On the 16th of February, 2022, 11 months after the Series C, Flutterwave announced a Series D of $250 million, led by the Singapore-American fund B Capital Group, with participation from Lux Capital, Alta Park, Whale Rock, Glade Brook, and the returning investors from the Series C. The valuation crossed $3 billion. $3 billion made Flutterwave, for that specific week in February 2022, the highest valued startup ever produced on the African continent. Higher than OPay, higher than Chipper Cash, higher than anything Egyptian, anything South African, anything Kenyan. Higher than Andela, the company where the whole idea had started. The official narrative, in Flutterwave's own announcement, was that the Series D would fund the company's African expansion, fund the launch of new product lines, and prepare the business for what would be its next obvious milestone, an initial public offering on a major U.S. exchange sometime in 2023. The unofficial narrative was that the Series D was the trade that defined Africa's 2022 zero-interest rate fintech mark, the highest price anyone would put on a single African company in that cycle, possibly in any cycle since. Inside Flutterwave, the senior team allowed itself, for the first time, to talk in public about an IPO. CEO interviews referenced a path to listing within 18 to 24 months. Recruiting began for a global chief financial officer who would carry the company across the public markets line. American Express's O'Neill Bhambani was hired in May 2022 as that chief financial officer, with two senior finance leaders following him from the Atlanta lending platform Cabbage. The trajectory looked that month like it had been called. And then, 14 days before the Series D announcement, a magazine in San Francisco had already published the story that would change everything. The magazine was Rest of World. The date was the 2nd of February, 2022. The headline was direct: Inside the Toxic Culture Scandal at Flutterwave. The reporting by Stephanie Findley and Damilare Dosunmu drew on multiple former employees. It described a workplace marked by bullying and fear of retaliation. It cited internal emails alleging that senior executives had had sexual relationships with junior employees. The most prominent on-record source was a former head of implementation for East Africa named Clara Wanjiku Odero, who, 3 days earlier, had published her own Medium essay titled "The Flutterwave CEO is Bullying Me, and It Ends Today." Flutterwave's response was that the allegations had either been previously addressed by the 2019 KPMG investigation or were unfounded. 14 days after the Rest of World piece ran, on the 16th of February 2022, the company closed the Series D and crossed the $3 billion mark. 8 weeks later, on the 12th of April 2022, the second story landed. The Nigerian investigative journalist David Hundeyin published a long-form investigation in his West Africa Weekly newsletter. The investigation alleged 5 things. First, that Agboola had, in the company's early days, invented a fictitious co-founder identity named Greg and used Greg's allocation to grant himself additional shares on top of the shares he was already due as a real founder. When asked about Greg, Iyanoluwa Aboyeji, the company's first chief executive, publicly stated that he had no recollection of any such person ever having existed as a co-founder. No third party has, in the years since, produced a Greg. Second, that departing employees who wanted to cash in their vested stock options had been offered share prices below the company's then prevailing valuation, allowing insiders to acquire those shares cheaply. Third, that Agboola had remained on Access Bank's payroll as head of digital factory and innovation while simultaneously building Flutterwave without disclosure to Access Bank. Fourth, an expanded version of the sexual misconduct allegations Rest of World had already reported. Fifth, that the U.S. Securities and Exchange Commission had, in 2018, summoned Agboola, Aboyeji, and the late Access Bank chief executive Herbert Wigwe to a hearing related to the share buybacks. Documents subsequently surfaced on the public internet referencing an SEC inquiry titled Flutterwave Securities Fraud Investigation. Agboola's response, in an internal email leaked to TechCrunch a week later, denied creating a phantom co-founder. He characterized Greg as an internal pseudonym used early in the company's history. He described the entire package of allegations as a coordinated reputational attack timed to the Series D. No criminal charges have been filed against Agboola personally in any jurisdiction. No public resolution of the SEC inquiry has ever been announced. The allegations remain on the record as unresolved. 11 weeks later, on the 7th of July 2022, the Kenyan crisis began. Kenya's Assets Recovery Agency obtained a Kenya High Court order freezing more than $40 million in bank accounts belonging to Flutterwave's Kenyan subsidiary across 3 banks. A second freeze on the 30th of August added more accounts. The Assets Recovery Agency alleged that more than $200 million in suspicious flows had passed through Flutterwave's accounts. It cited, as one example, a single account that had received 185 online payments using the same bank identification number from cards issued by the same bank at the same point on the same day. The pattern, the agency argued, was indistinguishable from card fraud. Flutterwave called the claims entirely false. The company's defense was structural. Aggregating a large volume of small merchant payment transactions is, in an anti-money laundering model, mathematically difficult to distinguish from layering. The agency had not identified an actual fraudulent merchant. It had identified a pattern. Less than 2 months later, on the 1st of September 2022, the Central Bank of Nigeria granted Flutterwave its switching and processing license, the highest-tier Nigerian payments license, requiring 2 billion naira of paid-up capital. The Nigerian regulator, in other words, looked at the same company the Kenyan regulator had just frozen and granted it the most consequential payments license in West Africa. The Kenyan story unwound slowly. In February 2023, the Assets Recovery Agency withdrew its principal case. The High Court released $51.9 million back to Flutterwave. The same month, beginning on the 13th of February 2023, 2.9 billion naira, around $6.4 million was moved out of Flutterwave merchant accounts in 63 transactions to 28 bank accounts. Flutterwave secured court orders to freeze recipient accounts and, controversially, adjacent accounts across 27 Nigerian financial institutions. Hundreds of accounts belonging to crypto traders and ordinary customers were frozen as collateral, triggering a backlash in Nigerian tech media. The company's official position was that there had been no hack, only what it called an unusual trend of transactions. 8 months after that, in October and November of 2023, the chief financial officer, O'Neil Bhambani, resigned after 18 months in role. The 2 senior finance leaders he had brought with him from Kabaj left in the same window. The chief operating officer would follow several months later. The exits came weeks after Hundeyin had published a further round of documents. In the press, the CFO walkout was widely read as a no-confidence signal on the company's audit trail and on its readiness for the public market it had once telegraphed. On the 9th of November 2023, the Kenyan Assets Recovery Agency dropped its final lawsuit. Flutterwave was formally cleared of all money laundering allegations in Kenya. The company had won every external legal battle. Every internal governance question remained, in public, unanswered. In October of 2024, Agboola sat down with CNN for an on-camera interview at a Flutterwave Capital Markets Day in London. The framing was explicit. The company was, in his own words, rebuilding trust. In February of 2025, he told Bloomberg that the public market listing the company had once telegraphed for 2023 would not happen until Flutterwave was profitable. There would be no calendar date IPO. The IPO would be tied to a number on a page. The strategic posture also shifted. The phrase, Africa's Stripe, which Flutterwave had used relentlessly through its fundraising years, was quietly retired. In its place, a new framing, Africa's Payments Operating System, a vertically integrated stack of 3 layers. Payments at the core, in the form of Flutterwave for Business and the Send app. Open banking and data connectivity, acquired in an all-stock transaction on the 5th of January 2026, when Flutterwave bought the Lagos open banking startup Mono in a deal valued between $25 and $40 million. And, on the 2nd of April 2026, deposits and credit, when the Central Bank of Nigeria granted Flutterwave a national microfinance banking license, allowing the company to hold customer funds directly, issue account numbers, and underwrite small business credit against its own payment history data. Paystack secured a comparable banking license within the same 4-month window. The 2 old rivals are now competing not as payment processors, but as full-stack financial infrastructure platforms, alongside MoneyPoint, the largest agent banking network in Nigeria. In June of 2026, Flutterwave announced that it had crossed 1 billion lifetime transactions and processed more than $40 billion in cumulative payment value across 30 African countries and 49 US states. Its consumer remittance app, Send, had passed 1 million users. Its merchant base had passed 1 million businesses. Its annual recurring revenue had grown from around $65 million in 2023 to over $95 million in 2024, with management stating that monthly margins had doubled in the first half of 2025. The $3 billion valuation set at the Series D in February 2022 has not been formally repriced. The all-stock mono deal is widely read in venture circles as a signal that the company would rather spend its own paper than mark itself down in cash. A future fundraise will, almost certainly, be at a number lower than $3 billion. The company has won every external legal case brought against it. It has answered no internal governance question in public. It is, in 2026, the same company it was in 2022. Bigger, more profitable, more diversified, more battle-tested, and still entirely under the control of the man who has run it since the 5th of October 2018. Every empire has an origin. Flutterwave's origin is 3 founders in a Lekki co-working space in 2016, a stripe-shaped hypothesis about African payments, a marquee Uber deal, and a 6-year sprint to the highest valuation ever placed on an African startup. The decade since has been harder. The next one will decide whether what was built survives the people who built it. This is Asili Africa. That is the story. And like every story worth telling, this one is still being written. If this episode made you see something differently, share it with someone who needs to hear it. I am Farouk. This is Asili Africa. Every empire has an origin. Now you know this one. So start building, because yours might be tomorrow's origin story. See you on the next one.